Welcome everybody. This is the Thursday evening Viper trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. Tonight's topic is Follow the Leader, where we're going to show how you can use the power of market correlations to anticipate and take high probability trades and possibly even leverage up to make good money. First, we got to get our standard disclaimer out of the way, so let's take care of that right now. Excuse me. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody here does know that you do trade at your own sole discretion. Welcome, Gene, John, David H. I see people still coming in. Don't worry. Of course, you can see we're just getting started. Running just a pinch late tonight, but we're going to get her done. So without further ado, let me go over to screen one. I've got gold and ES to start off with. So where is that little controller? There we go. All right, here we go. Screen one. Okay, here we can see everybody see gold on the left and ES on the right. Gold chart on the left. Cursor moving around in the middle of it. ES chart on the right, cursor moving around in the middle of it. Yes? All right, excellent, excellent, excellent. Now we're going to approach this webinar in a couple of different ways. The first thing I want to show is the correlations between when you look at these two charts right next to each other, I want to ask a question first, make sure everybody's kind of on board and awake and paying attention to what's going on. What do you say the relationship between gold and the equity markets is in terms of the futures markets? What is the relationship between gold and the equity markets? So take a look to your left. This is gold over here, okay? And then look to the right, and this is ES. So when you make an observation of the chart, what's the first thing that just jumps right out at you? Are they correlated where they move together? Or would you say that they're correlated where they move opposite or inverse to each other? Right. It's a mirror image. So when gold is going down, and I don't know an exact percentage of what the time is. I'd say it's very, very. There's occasionally a day. I remember last week there was one day where equities were going up and gold was going up, but it's extremely rare. Very, very, very rare that you ever see that. There might be some funky news or something that really is affecting the gold market where the correlations do not work. I'd say as high as 90, 95%. Maybe 1 or 2 days out of a month, you'll see where the correlations don't work. And here's the other thing. If they don't work, it only is for a short time, and then they come back to alignment. Okay? So some of you are completely new, and some are visiting. If you are new and you're visiting, welcome. I just want to say that real quick to you. Hope you're having a good kind of little open house week here with us. Now, let me explain what you're looking at. Some of you might be looking at this for the first time or trying to understand what you're looking at just in general. Let's start with the ES chart. Let's talk about the concept of trending markets and range-bound markets. That's where we normally start. And I'm not going to spend a lot of time on this because we have other webinars where I've spent entire webinars talking about that very topic. So I'm literally going to take a minute or two. You can see over here that I'm here in California. So let's just get you oriented before we get into talking about trends and trades. Markets opened at 6:30 Pacific, my time, 9:30 Eastern. So ES would have looked something like this at the open. Arguably, it was a little bit range bound, but you can see that the background was green. So when the background is green and the bars are predominantly blue, and you're getting a series of what's called higher highs and higher lows, like such, we are looking for taking long trades. So we're buying the market at support, right? So in this case here, normally what causes the background to turn green, just to let you know how the algorithm works, is that you get what's called this notion of a thrust. In this case, the push or the thrust would be in the up direction, turning the background green and your bars are predominantly blue in here. See how they're blue? And so that's how you know you're looking for long trades. Now, if you notice, what we like to do is quite often you hear trade calls in the room that are centered or around at or on the mid band itself. Excuse me. So one of the most prominent things on here is obviously these bands. You have 1, 2, 3, 4 bands below the thick line, which is the middle band. You have 1, 2, 3, 4 lines above it, bands, which are total of 8. And the thick line here is always called the middle band, the mid band, right? And so obviously when the market's going up, the mid band will stair step up like such, and it will follow the market accordingly. Conversely, when the market is heading down, like it is here, the background will turn red, and it will be the complete opposite of an uptrend where you are shorting kisses of resistance and dropping down. Now, there are 3 basic types of trades, and what we urge you to do is try to master at least one first, and we strongly urge you and recommend that that be the mid-band trade. So let's look at an example of some mid-band trades, okay? In the uptrend at the open. Let's just take a quick look-see at how we might have traded that. Excuse me. Most of you know, of course, that we have this a tool. It's a panel that's a strategy that's a semi-automated tool called Object Trader. And so when we talk in the room about placing boxes at a certain area, what we're specifically saying is to take the candles and engulf them with a region box using the Object Trader tool. So here, for instance, would be an example of a long trade entry right at the open. Okay, so how does that work? Well, here we have a thrust. Market comes up to a fresh swing high, background turns green, and even before the market opened in the pre-market session, you had another long trade right here. So a mid-band trade, by definition, is as follows. It is bars that are sitting on the mid-band or bars that are located immediately above or below the mid-band, like such, in that area right there. Any bars in an uptrend that enter that area and then come out of it is considered to be a mid-band trade. All right, so here's one right here. Some of the bars are sitting literally, quite literally, right on the mid-band itself. And if you engulf the bars like I show here, what happens is and you do close, then the Object Trader tool fires a market long order on the close of that bar right there. Likewise over here, if you had engulfed this area with a region box, one of these bars here, depending on when you drew it, would fire a market order long coming out of the box right here. Now, is there other ways to get in? Of course there is. You can identify an area like this and even draw a box around it. And if you don't use the Object Trader tool, let me scooch this to the right and discuss how you might do that. So let's say that you want to enter this area, but maybe the bars are moving quickly, or you don't have time to get a box together, but you see that there's some swings just under the mid-band where you want to get in. Let me make sure I'm in sim. Stand by. I want to start firing large real trades in the middle of the night here. No liquidity. Yeah, I'm in sim. Okay, good. Okay, I can show this. Occasionally it'll get filled. I know you may have been, sometimes I'll show these, and the next thing you know, boom, you're in. The market starts taking off. But no, you simply click on the chart here. It brings up a little drop down. You can do this in the OT tool too. There is a limit order deal in there. Buy limit order 1. And so it's very similar to the box itself. When that bar closes here, you're filled long. Well, in this case here, you're going literally like one tick above the box. So the top of the box is at 50, and your buy order is at 50 and a quarter. And if you happen to use the OT tool, which would fill on the close of the bar itself, you'd be filled at like 50 and 3/4, like on the close of one of these bars, depending on when you turned it on. This bar would be at 50.50. You get the idea. So you're long. Okay? Now, the way we teach this, and I'm only going to explain this once on the long and the short side, is that if you're going to trade 2-lot, how do we normally like to do it? If you're going to put 2 contracts on, how do we normally like to do it? What's sort of the base go-to trade when you're putting 2 contracts onto a trade? Anybody? Any ideas? Any ideas how you do a 2-lot trade on using the Viper tools? What's our standard sort of go-to setup? You don't have to do it this way. This is just the normal way we do it. We get the scalp off, and then you get a runner. Yeah, right. So let me quickly explain that. So in this case here, you're filled long on one of these bars. Let's say it was a limit order at the top of the box, and so your fill would be 50 1/4 right here. Stand by. Get this on the other screen. There we go. Does everybody see what we're doing here? You can either engage this box. Another thing you can do, if you're confident you're going to get a bounce here, that the correlations are intact and the other markets are already running up, you can hit a market order in here and get filled at 49.50. There's all kinds of ways to get in here. So, but anyway, you're going to put a 2 on here. Now, where might it go if it's going to go up? Well, we have some swing levels established. You could go to line 6. That's usually a good target. And we can clearly see that there's some more resistance up here. Right? See that? 2. So you're looking for a scalp. Now, an ES, you can put your scalp as low as 6 ticks. I've seen 4 in choppy markets. You can go to 8. And let's see what happens. We get a pop. We go right to line 6. So it went from 50 1/4 all the way to 53 3/4. That's 3.5 times 4 is 14 ticks. So if you had a target in Object Trader, if you use the semi-automated OT tool, and let's say your target was 10 ticks, it would automatically go up here to 53 1/4 and put the target right there. Now, at the same time, and if you do it manually through limit orders, as I'm showing here, then you have to manually do this. You're going to manually put targets. So you'd put a sell order up here before it got there, and that would be your scalp. And you're long, so you put 2 sell order buy to cover or sell order stops down here. So your trade looks like that. Okay? Everybody see that? That's how your trade looks like on that trade, right at the open on ES. Trading a 4-range chart using the tools. All right, now let's see what happens. Now, generally speaking, after this gets filled, now you're down to 1 contract here. So you only have 1 lot left. 1 came off at 10 ticks, yes? And you only need 1 stop because it's an OCO. If you don't use the OCO, then obviously you're going to have to do it yourself. Now, generally, you're going to want to come up here to 3 ticks behind your entry. So that this stop, if you're doing it manually, is going to come up into here. That's what we call a free trade condition. So you've gotten your scalp off at 10. You're protected on the other second lot at 3. You're going to, no matter what happens here, you're going to net 7 ticks. That's called a free trade. Okay? Now, watch what happens. This happens a lot, especially on the equities and gold, is you get a pushback off of there, and it comes right back, and look where it checks. Right where you got in. Right here. See it? Now, some of you might be saying, hey, wait a minute, Charles. Is that another entry at the mid-band? Yes. For those of you who weren't long from here or here, that is another entry. Yes. Could you box it? Yes. You'd be filling long on that bar right there. Could you put another limit buy order here if you weren't in from here? Yes, of course. The trend is up. You're buying pullbacks to support, so we're retracement traders. So just here again, so you understand the concepts that we're explaining, is that you get this notion of thrust. We don't buy the thrust. The thrust in an uptrend is where we take profits, right? And then here we get the pullback right into support, and we look to initiate another long position in here. All right, now let's see what happens to this trade. So now you got your runner, and you start to engage your trail stop. Does everybody know how to do a trail stop? Just pop quiz? Pop quiz. What do we use when we're doing trail stops? What do we use on trail stops? What's something that we use if you're going to do a trail? How do we do that? Anybody remember how we do that? What part of the tools do we use when we're doing that? You can, well, if you use the object trader tool, yeah, it's not, you can make it automated. It'll just do it. It'll move it for you. You don't have to do anything. Essentially, when that box is activated, you're done. I mean, you still got to move things around and watch it. You just don't walk away and say, "Oh yeah, well, let's see what happens." Yeah, you try to use a combination of good. Okay, so let me advance this chart a little bit here and show how this moved and how you might deploy a trail stop plan. Now let me blow this up here so I can really kind of explain this a little bit better. Okay, all right, here we go. Now, can you see right here that after we bounce off the midband one more time, and that was another entry for those of you who weren't already in the market, and your stop's sitting down here, so now you're good, so now you start to trail. Now notice what happens here. I want to show you something, and there's really, like when you hear in the room things like put a tight stop at, whatever, like, 53 and a quarter. Or, tight stop would be 54 and a quarter, and a loose stop would be 53. So what am I talking about? Let me explain. Can you see how we have a couple of indicators on the chart that begin to follow the market up? Here we get a thin, sort of sneaky snake looking line that's called stealth. Can you see these little green lines coming up like this? Green line, green line, green line, right here. See them? Notice how they follow the market fairly closely. Now, one word about putting your trail stop right on the stealth is normally not a good idea, because a lot of times they'll break it a little bit and then run another 20 ticks. So that's too tight. Now, notice the other thing that you start to see here when we punch through line 6. Line 6 is this green line right here. This is line 6, top of band 6, right? So what happens is you can see that stealth is following the market up, line 6 is following the market up, and the market continues to ascend in your favor, right? All right, so then what we do is we continue to track, and what I like to do is in the beginning stages of when a market is breaking in your favor, what I say by that is I mean like the first 5, 10, 15, 20 ticks on ES, you want to give it some wiggle room. You just don't want to crank your stop up super tight, because any little pullback is going to take you out, and then you miss the rest of the trade. You don't want to do that. You got to let the market move around a little bit. See what I'm saying? So you leave some wiggle room between the market stealth and line 6, and so in that case, your stop's going to sit like right here as the market's moving up. See it? How it's loose? See it? Okay. All right. Now let's start to measure some things here. Okay, we come up, we're coming up, we're coming up. Now, what else is a factor in our decision making as far as what's going on with ES? At this point here, when we're moving up, what else could we be looking at that will affect how we might approach this? What other charts, what other instruments, what other things do we take into account when we're trading ES? Anybody? Remember in the other webinar I had the other day where I showed my 4 charts and how I read the markets of the direction and who the leader is and who the follower is? Right. We're watching NASDAQ. I'm calling out NASDAQ and watching it on my screen too. I'm calling out YM and you're watching it in the room with us, right? And we're watching what gold's doing. Remember that inverse relationship thing? Remember? Now, I'm not going to show that right now. I'll swing back and I'll show that in a few minutes. But be cognizant of the fact that you're going to be able to take ES trades, being the follower, with the high degree of certainty because of the correlations. All right, so here we are. We're following it up. We're following it up. We're following it up. Now, notice what happens here. I want to show you a couple of things. So here's the stop coming up, stop coming up, stop coming up. By the point we hit 64 and a quarter, how many points or ticks have we moved from our initial entry at 50 and a quarter down here? Well, Let's do the math. You've gone from 50 to 60 and a quarter. That's 10 points. And how much is ES worth again? Anybody remember? How much is ES worth per point? If you trade ES, you should know this, right? So how much is ES worth a point? 1 point, 1 point, not a tick, 1 point. $50. 4 ticks per point, $12.50 a tick, 50 a point. Okay? Good. Now, so by the time you've gotten up here to 14, you've gone 4 times 5, you've gone another 10, 50, 64 ticks. Now, most of you know, of course, if you trade ES, 64 tick move on ES is huge. That's monster. And it's money. So what are we going to do on this? Okay, let me take this off because I don't want this to be confusing. That was our scalp target, remember? So that's gone. In the beginning, in here, as it starts to break up in our favor, we said we're going to leave our stop nice and loose. Remember? It's going to stay well behind stealth and well behind line 6. Now, as you ascend into 50, 60 plus ticks of movement, what do you think you should do with your trail with this? Should you leave it real loose, like down here? Huh? Let it all come all the way back down here? What do you think? Keep it real loose. Here's the price. Here's your stop. You're 6 times 4, 24 ticks away. What might want to happen to this trail as it moved very precipitously and quickly in your favor? Should you leave it loose, or might you want to start cranking it up super tight like this? Like maybe like that. Now in this case here, in my example, you go right on stealth. And you're taking out probably on one of these bars like right in here. You everybody understand why you do that. So there's several ways that you can make money trading futures. Okay, the one is you can scalp, and we explain what that is. Very short, quick, capitalizing on quick pops, 6, 8, 10, 12 ticks. You take that money, and a lot of people just scalp, and that's all they do, and that's fine. On the other hand, most traders make most of their money on the runners. And so there's an old saying, and I know everybody's heard it, let your runners run. So let your runner run means that when you got a runner, you got to let that puppy run as long as free as she can, right? And then once you get up sort of around some swing levels here and you've moved 60 plus ticks, you got to crank that pup down and get out. Lock it down. Don't keep it. So that's when I say something like in the room, you might hear like, okay, we've run, whatever ticks, crank your stops up real tight to 62, 50, 62 and a quarter. That's where that's coming from. And that's the logic behind why we do it that way. Does everybody understand? Good. All right. Okay. Now, after a market opens in the first few minutes, we have to understand that markets are going to move around. And sometimes they're going to flip direction, and sometimes gold's going to flip direction. And I'm going to ask you a question. Now I'm going to advance this chart. And we're going to do a quick exercise to make sure that everybody's awake. And I'm going to reconstruct what happened on ES starting at 638, 639. And I'm going to gradually advance the chart. And then when you think you see a long trade entry appear, you just simply type in the letter L. Okay? Here we go. You ready? Here we go. We're going to do a little exercise together. Reconstructing ES after the open. Okay, here's 639. Let me get this cursor off here. Stand by. There we go. Okay. All right, here we go. Remember, we're looking for long trades, and you're going to type in an L when you see the conditions present to take a long trade. Okay, here we are at 640. Okay, here we're at 642, 643. Blow up the chart a little bit so you can see it. L for long. L for long on retraces, right? 641. So we're 11 minutes into the market open, looking for long trades on retracements into support. There's 642. Okay, Let's do that again. Let's do that again. Here's 640. Here's 641. Here's 642. Okay, let's do it again. 640, 41, 42. So it sat there for a good 2 minutes. And what would you surmise is the proximity of the location of the candles at this time? What say you, team? Well, let's circle back. What do we say over here when we first started to discuss mid-band trade entries? I think we said something to the effect of when bars are in the band above the band, when bars are in the band below the band, and when the bars are on the band itself. Right? That was our criteria for a mid-band long entry. So let me ask you this question as you see this now. Where are these bars located right here? In fact, the bigger question is, in your view, do those bars constitute a mid-band long trade entry? What do you think? Well, here's the definition of it right here. Here's the definition. So the question then is, has the bars penetrated into this band? And the answer is yes. That's a mid-band long trade right there. If you typed the mid-band long L anywhere when these bars were forming, you were correct. By the way, just to step back for a second, when I started this exercise, I started it here at 639, and there was a small handful of you, a couple of you, and I want to just go back and correct this. So this is important, and this is why I'm saying it, is typed in L when you saw this. Okay, now looking back on it, you understand that that's not the long entry. You almost never, ever enter on a thrust where you're at a swing high. It's very rare that you would ever do that. See this? See this little pop here? What happens is a lot of traders, think that it's going to, and I understand the mentality. I used to do that all the time myself. I can totally relate to it. The thinking here goes like this. Well, it sat here. This is a higher low. It looks like it wants to challenge that. I better jump in and buy before it breaks and takes off to the moon like that. And I'm sitting here holding my hands, not making any money. I understand the logic behind that. But sure enough, as soon as you pull this trigger up here, right? You pull the trigger right up here and you get filled right near that top. It starts to pull all the way back to the mid-band, and maybe your stops are sitting right here, 10 or 12 ticks down from buying your entry. So what's happening for the trader who entered at the peak, the trader who's entered up here is getting stopped out here, whereas the trader who patiently waited for this entry is now getting long. I don't think so, Kevin. I think I can pretty clearly show in the first half an hour to 60, 90 minutes that there was probably, well, I know on gold for a fact that there was 5 beautiful long entries, textbook. And there was, I think it's 2 or 3 on ES, and that happens pretty much every morning. So what I'm addressing, his question was, do you have to sit around and wait all day for this retracement thing to happen? The direct answer is no, you don't. Almost every morning, unless it's just extremely choppy or a holiday or something, and market's closed or going to close early or whatever, that would be an exception where it'll chop around, you have to wait a while, and then you probably shouldn't even trade it anyway. All right, is there any questions on this? Is it clear what we're doing here? Everybody see this? Okay, so we learned here, stepping back over here, right? We learned that this was a mid-band. We knew that was a mid-band in the pre-market. We understand the concept of thrust and retracement. We are retracement traders. We're pullback traders. We have to wait patiently for pullbacks to get into trades, whether that be short or long. We understood how we traded this with 2-lot. We got scalp off. We got our second protective initial stop up to within 3 ticks of our entry. We waited for the pullback, checked our entry, up we went, we trailed our stop. After we got over 50 ticks, we tightened our stop tight to here, and we got out here. We patiently waited, we got a double top. We did not pull the trigger again up here. This was the exit right here, actually. We patiently waited, and we only had to wait a couple of minutes. I mean, you heard me count it down, right? I mean, I started doing this exercise at 6:38, 6:39. You only had to wait, what, 2, 3, 4 minutes? Not even that. Okay, here you go. So 6:38, there's 6:39, There's 640, 641, 642. I mean, this thing sat here for almost 3 minutes. I mean, I think the problem that I've seen, and look, I understand it when you're learning this. I get it. You know, I know that sometimes you feel like you're reacting after the fact to a market move, and what happens in that case is you're getting in late. Sometimes you might get in so late that you're getting out, or you're getting in when people are already taking scalp money. Yeah, I'm not going to teach that today. I see what you're saying, Brian, but I'm not going to teach that. I'm going to focus on, I'm not going to talk about all three trade types, because I think for those of you that are just learning the system for the very first time, or you're coming back to learn it again, I know there's a lot of folks that were with us that have come back. I would say welcome to you. But the key is to really focus on getting this mid-band trade down. Seriously, this is where it's at. When a market's trending, especially ES, that's real calm and mellow and doesn't jerk you around all over the place, when you get into this area here and it's trending, that's money. That is money. I'm telling you. And the correlations help you too. Because what will happen is, and I'll show, let me get to the right correlation. Let me wrap this up. Is there any questions on this long program and how that worked? Yes, there's training on the site, Kevin. Let me just quickly show everybody real quick here where you want to go to do that. So now here's the thing. If you are a member with us, I'll show you two things with the training real quick. Just take a second. Okay, here we go. All right, so this is our website. And what you want to do is you want to navigate to here, which is on the toolbar. Click on webinars. And then you're going to see about 12 to 15 webinars. And these are all new. These are all just brand new. I mean, I think these are all like in the past week and a half, 2 weeks. This is the most recent webinars right here. Now, if you're a member, you're going to click here and log in, and you're going to get probably 200-300 hours of recorded material going back like 6 months to a year. So you just log in here and get access to all these and much, much more. But if you're just, on a free trial or kicking the tires, or you're here, visiting us or whatever, just come to this page, and that's where the training is. So you might be saying, which one should I focus on? Trading ranges. I think was that me? See and take perfect trade entries. I think that was me. I think I talk about mid-band trades there. Support and resistance levels. All these are good. You can just download a half a dozen of them and then set them aside in a folder. And when you get a spare hour or two, just go and watch them, okay? What's really going to happen with that is that's going to, when you come in the live room and we start talking about this lingo of boxes and mid-bands and getting in and getting long and flipping it short and phantoms and minimum criteria and all that sort of stuff, when you come in at first, that's going to sound like some foreign language to you. What in the heck are they over in Kazakhstan speaking some funky language? No. What we're describing is how we're using these tools to take trades. Okay? All right. Now stand by. Let me advance this chart, and I want to talk about, I'm going to skip to the correlations right now. And then I'm going to finish up with that. Now, as far as the correlations go, let me just explain it this way. The system in and of itself, the Viper trading systems, indicators that you're looking at here, are sufficiently built to see and take trades in and of themselves. So what I'm saying is, if you find that looking at other charts and trying to watch these correlations is just confusing the heck out of you, maybe you sort of intuitively understand them, or you see them and sort of get it, but it causes problems for you to hesitate, and you just don't take trades, and you get in late, and now you're all confused. If that does that to you, then by all means, don't use the correlations. Okay? That's what I want to say. I want to say if they're helpful to you, by all means, use them. If they're not helpful to you, by all means, don't use them. Now, I want to show something to you. Okay? Here's what I want to show to you. Here's how I'm going to do it. Here is exactly how I'm going to do it. I'm going to show you a gold chart, and we're going to walk through it together. Okay? Are you ready? Now I'm just going to show you this chart, and we're going to talk about it, but then I'm going to do the correlations, and then I'm going to pull in the other equities and do the final and close with those correlations. Okay. Now, here is gold at the open. 630 on this chart right here for the gold futures. GC is located right about in here. See if I get a line at 630, somewhere right about in there. Yeah. Now, what will we expect gold to be doing? What kind of trades did we take? What trades did we just look at on ES? What trades did we just do on that chart together for the past like 40 minutes? Were we taking long trades or short trades at the open? The ones you just looked at on this chart right here. I'm not going to click on it. I want you to remember. Right here, sitting right behind it. Right here, we just looked at it. Spent 40 minutes looking at it. Were we taking long trades on there, or were we taking short trades? Right. We were buying long. We were getting mid-band long trades. Right. Remember? All right. So let's look over here. Here's the pre-market. What would we expect gold to be doing in here? Remember, we're taking longs on the equities, longs on ES. What are we expecting gold, with its inverse relationship, to be doing? Short. Can anybody tell me where there is a short setup on this chart? Either with a number level here, or with a time here. I don't think I can tell you for a fact there is one here. There is a setup, and I'll give you a hint. It's right around the open, but I'm not going to tell you exactly where it is. Where is it? Where's the short? Where's the short around the open on gold? Remember our rules. What's our go-to trade setup that we like to use every day? What's it called, and where's it at? Starts with an M. What's that go-to trade every morning? Come on, remember. I showed you just a minute ago. I'll tell you what, if you could just learn how to take mid-band trades and nail them every morning on ES and gold, you would be retiring with a big fat trading account. I'm not kidding you. Yeah, okay, you guys are getting it. Look. Okay, so look here. Now we changed the background from green to intermediate color right here with this thrust down through support. This is the thrust in the down direction. By the way, this is the current day open high low. Gary doesn't have this on his charts. This is something I personally use. This is an out-of-the-box ninja trade indicator. We didn't develop that. You can pull it off the standard indicator list and put it on. The dashed here is the high of the day. The black line here, stand by 1 second, please. Stand by 1 second, please. Okay, so here's what I'm showing, that you had the thrust down here. Now this black dash line is the open from the prior day. The white line is the low of the day, and the blue dash line is the, high of the day. Here is the retracement right into the midband. So in the case of the short, the definition of the midband trade remains the same in its location. So in other words, it would be bars that are in the band directly above and below, just like the long entry, right? Same thing. And or bars that sit directly on the band itself, right here, right? And so we can quickly look, just visually looking at the chart, we can see that there are bars sitting where? Where are those bars located? Right there, right in the sweet spot of taking a short. And that's correlated to ES and the other equities that are heading up at the open, right? So let's go back and put this together. Let's go back and put this together. So the long trades, so your short trades on gold look like that. And your long trade on the ES at the open look like this. Oh, where is that? Where is that thing? Where the? Oh, I took them off. Oh, I should have done that. My apologies. I cleaned this chart off. Sorry, sorry, sorry. Let's go back so you can see it. Yeah, here we go. Remember? Remember? Here's 630 right in here. Long, long, long. Remember? And you even got a little bit of long here over at 706. Everybody remember? Long, long, long. Equities, long ES, short gold. Now I'm going to put a line on here, and I'm going to start advancing the gold chart. And I want you to give me a prediction on what you think is going to happen. This is going to be a good exercise for you. All right. I'm going to put a couple of lines on this chart on Goldie right here to the left. And I'm going to put one right here, 637, 638-ish. Let's make sure I get this right. So you're 8 minutes in. There's 630 right there. Yeah, so that's the open. Here you're about 8 minutes in. And then I'm going to put an arrow on the chart. I'm going to see if that's going to help you. Now there's 642. We pull back. This is a yes-no question. 5 seconds. Pop quiz. Make sure you're awake. Drink your soda. Your caffeinated Coca-Cola. Is that a mid-band trade? Long, yes or no? 4 seconds. Just type in a Y, yes, and no. That's it. It's a binary situation. There's no, I don't know, I got to think about it, blah, 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 whatever. 3 seconds. Y or N. Just hit it. Don't think about it. Just react, like blinking. 2 seconds. Mid-band long, yes or no? 1 second left. Time's up. Yes, that's a mid-band perfect textbook long. Now I'm going to continue to advance this chart. And here we are at 650. And was that a nice, good, long gold trade? Did we call it in the room? Yes. Did we take it? Yes. Did I take it? Yes. Now, as we advance this towards 7 o'clock, and we're ascending higher on gold, as I begin to advance this chart on the right, what should happen to ES? Should ES from here go up or down? Okay, look at gold. What should be the direction on ES? Right here. Just it looks right here. This looks like. Should it do this? Is your prediction up or down? I'll give you 10 seconds. So if you say up, then your prediction is that it's going to go like this. If your prediction is down, you would type in a D, and your prediction would be this. Look at gold. Remember the relationship. Remember when we started off, we showed what the relationship between these two instruments was? So what do you think? We're going into 6, we're coming into 7 o'clock, and Goldie is up here. Goldie's doing this, right? What direction should ES go? Up, U, or D down? 4 seconds left. Type in your answer. If the correlations are intact, which they were, 3 seconds, just a U or D. Make your call, up or down. And I'll advance the chart, and I'll prove you right or wrong. 2 seconds, U or D. I'll tell you what I've learned over the years, and I've done probably thousands of webinars, the more you participate in these, the more you learn, because there's repetition, and the quicker you pick it up, which equates to directly how much more money you're going to make. It's amazing how that works like that, huh? Yeah. Okay. All right. Time's up. Let's see who made the correct call. Advancing the chart. Advancing the chart. Uh-oh. Uh-oh, Captain. Uh-oh, Captain. What's going on here? Okay, let's go see what happened with gold to 721. What are we talking about here? What's up, Big Joe? What's up, Big Jake? What's this? Oh, we're pulling back. What is that? I don't know what that is. Maybe I've seen it before. What could that be? Let me advance a little bit more. What could that be right there? 711. Where are those bars anyway? Where are they located? Oh, they're right on the mid-band. Yeah, it's a mid-band long. Right. There's 721. Okay, let's do it again. What's that? Where are those? How many longs have you had on gold and you're at 730? One? Well, arguably. Well, you probably would have taken that one. 1, 2, 3. So what do we think is going to happen with our friend Mr. ES here? We're going between 639, 640, 645, and 730. We've had 3 beautiful gold long trades. And we're just sitting right here. Now we've broken support. So those of you that said down are looking what? Correct. Let's see. So we pause here. We pull back. We kiss the midband. In the room, we said if this gets a lower high and breaks through the support level here, Gary had a line like right here. Remember? And kisses and rolls underneath the midband, your short entry was right there. That was it. Right there. That's it. Sure enough, she falls off the map all the way down to here. Look at that. And if you recall, I said it should hit, you want to fade that bottom down there at 39 3/4 because you're coming close to the low of the day. Now, bonus points. Which one of the other equities broke their low of the day? Who was the leader? Which one of the other ones broke the low of the day ahead of ES coming to within 3 ticks of it? Bonus points. Well, it was a fight for the leadership today. You're right. Good. It was a little bit of a fight for leadership today. What I mean by that is in certain parts of the morning, YM was actually the leader. In other parts of the morning, NASDAQ was the leader. Let me see if I can illustrate this point. Now remember what the ES chart looked like, and I'm going to come over here and I'm going to start showing you what happened with YM. There you go, right here. See this right here? Remember we got a double, triple top up here, remember? We were watching it all together in the room, remember? 7 o'clock, 7:10, 7:15. This was getting like a double, triple top up here, remember? Here, let me put a line so you can see what I'm talking about. This peak right here. So we just looked at a chart where gold was going up precipitously. It had bottomed at 639. It started to make a trend change at 640, 645. And by around 7 o'clock, 709, 710, 720, and into 730 and beyond, gold was heading up. And we were taking those beautiful mid-band long trades, right? Here at 709, we peak on YM. And if I was to advance the right-hand side of the chart beyond 720, 722, what would be your expectation of the direction? If you were to predict this, would the prediction be up, like this, U, I'm going to give you 5 seconds on this, or would the prediction be down, D? 4 seconds left. Cast your vote. You're predicting the direction after 719 on YM based on your current knowledge and remembrance of what gold was doing at this time and what ES was doing at this time as well. So cast your vote if you think it's going to go up, would be a U. 4 seconds left. If you believe the correct direction from this point forward is going to be down, well then by all means type in the letter D. 3 seconds left. Which way is it going to go when we advance this chart? 2 seconds. Cast your vote. Which way is YME going to go based on what we remember from the other 2 charts that we just looked at literally seconds ago? Like if you're going to put a trade in here, what would you be doing? Would you be shorting it? Or would you be getting long, getting ready to get long? Now look at the color of the background. Look at the color of the bars. What's the mid band and all the other bands doing? What are the clues that this is leaving for you in this current condition? Right? Okay, I'll give you one more second. What are you going to call it? You're going to call it up? You're going to buy it? Or are you going to short that pup? 1 second. Time's up. Short. Yes, down. ES was heading down. We knew that, right? Gold was heading up. We knew that. And so sure enough, WYME falls off the map. Just like that. Look at that. Now, what is this right here? What is that? What is it doing? Where is it close to? What's that box? Where's it at? What's that line? Remember what the line is? What is the line? What is that line? Right here. Remember we talked about the line. What is it? Remember? What does the white dash line mean? Anybody remember? Where are you coming right to? You came right here, 40, 30, 34, came within 2 ticks of it. The low of the day, the current low of the day, not the previous low. So just to be clear, when you put the current day open, high, low indicator on, it starts when the market opens on the previous day. So here in California, in Pacific time, we have the market closes at 1:15 for 15 minutes. At 1:30, all the futures markets open up again, and then they trade overnight in the Asian session, European session, and the U.S. session at 6:30. Okay, so when they open at 1:30, like today, for instance, it closed at 1:15, right? And then it reopened at 1:30, and so at 1:30 would start these lines would all reset. That's the Globex open, right? Yeah. All right. So that's what those lines are. So if you had said short, the prediction was down, and you should be shorting the market, you were correct. The background, as you notice here, was red with this thrust. How many mid-band shorts are in this sell-off? Counting from the right, from here forward, I'll give you 10 seconds. How many mid-band shorts are on this chart from here to 755? From here to 755. 9 seconds. Counting mid-band short trades. Just type in a number. Quickly assess the chart and type in a number. 8 seconds left. There's quite a few. If you know what a mid-band short is, you can quickly assess it. 7 seconds. That's what you want to do. You want to train your trading mind to look at a chart and instantly know what to do. 4 seconds. Counting shorts on this chart on YM. Mid-band short trade entries. 3 seconds. Observe the chart. You don't even have to say where they're at. It's just simply the count. 2 seconds. Counting shorts. 1 second. Squeak your number in there if you can. You see them. 1 more second. I'll give you 1 more second. Squeak your number in. Counting shorts. Mid-band on YM on this beautiful sell-off this morning. All right, time's up. Now, I'm not going to count this one simply because at the time this occurred, this box right here, I would not count as a short trade. Because if you look at the situation that the indicators were in at that time, that the mid-band had been stair-stepping up, the background was green, and you might have actually been thinking about taking a long trade here, which probably never filled. Okay. And then very precipitously at between 7 and 7:15, we get this enormous thrust down. Our background turned red. All the mid-band and all the bands are stair-stepping down. It's very clearly a shorting condition. Everybody knows that. And I'm counting mid-band. So 1, 2. Now I wouldn't count that one. Just a wick of a candle into the barely of that. That's not. I'm not going to count that. Okay. We have another name for that. That's minimum criteria. Is that a trade? Yes. But that's not what we're teaching, and that wasn't the question, right? Okay, do these go? Do these bars go in? Do these bars go in? No. no, no, yes, 3, yes, 4, and that was it. If you said 4, you were correct. Remember, the question was mid-band short trade entries. It wasn't minimum criteria. If you're counting minimum criteria, you would have been, adding all these ones in, like here and here, for instance. But that wasn't the question. Okay. What we want to do, if we're going to get really good at this system, is focus on getting really, really good at seeing and taking mid-band trades in a strong, powerful trend. Now, let's add this up real quick. How much money could you have made off of this? Well, let's do some math real quick. Let's say hypothetically you took this box right here, and let's keep it real easy. You were short at 600, right? It might have been a little higher, 604, whatever. Okay, you're short from 600. And you go all the way down, and let's say that you stop out at, make it a round number 50, right in here. Final stop. And maybe it was broken into one continuous trade, or you took 1, 2, 3, 4 shorts, where you were in, you stopped out, you kiss and roll, re-enter, stop out, kiss and roll, re-enter, et cetera, et cetera. What's 450 minus 600? 450 minus 600. So let's just put it right on here. So we had 4 YM short trade entries off the mid-band. And I think that would be 150 ticks, if I'm doing math correctly there, right? And how much is YM worth a tick? So if I put a 1 contract trade on, then I trade it all the way down, what would that equal? I got to put a number in here. Anybody got a calculator handy? You got to know what YM's worth a tick. You got to know that. How much is YM worth a tick? And what's that times 150? And I can put a number in here. Anybody help me out? Anybody know YM? What's that worth a tick? Anybody know? Yeah, $5 a tick, 750 bucks. Good. Yeah, excellent. Right on the money. 750 bones. Now, if you put a 2 lot on in and out, how much would that be worth? How many of you on a 1 or 2 lot on YM would be done? That would be it for you right there. 1 or 2 lot. How many of you, if you were in a combine for a top step trader or 1-up trader, and your goal for the 50K account was to make $3,000, and you traded 2 lot on YME? What do you think? You halfway there? Well, now there's, you've got to trade other days. You got to have 15 active days, and there's consistency rules you got to follow. But the point being is that you took 1 2-lot trade, or four 2-lot trades on YM, starting at 7/7/10, and you were down by 8 o'clock, and you made $1,500, which is half of your goal in 1-up trader to get funded on a $50,000 account. Which, by the way, Gary and I both highly endorse these funding partners who capitalize traders. I don't know why anybody. That's not the right way to say it. Let me say it this way. If you don't want to risk your own capital, if you've had accounts blow up in the past, if sometimes you lose money and you're trading what's called scared money, you know what that is, right? Loss, loss, loss. You take a $10,000, $20,000 account, you grind it down to $5,000. Every trade you take, you're like shaking in your boots. So if you've been through that, you know what I'm talking about. You don't have to do that anymore. Okay, that's the old days. We're in 2010 now. There are partners, there are capitalized partners who want to fund futures traders, and one of them is 1-up trader, and here it is right here. Let's go to the 50K account. You sign up for this evaluation account. They give you a Ninja Trader license and to trade sim. It's called an evaluation account. And what's your goal to get funded? $3,000. Okay. Now remember that number, and let's come back over here. You took all these trades on YM, 4 shorts, Of course, it'd be less commission. You got to take commission out of that. And your fills might have been a little different. So then in actuality, your numbers could have been a little higher than that or a little lower than that. I'm just trying to make a point. Yeah, you're halfway to your profit goal in 4 trades in one day. Let's go over, let's say you're going for the 25K account, this account right here called Novice. Let's take a look at what the qualification profit level for that is. What's this, Captain? Captain Stubing? What is that? What is that number and what's that number right there? Yeah, you would have been funded in one day. 1 day of trading, you would have hit the profit goal. Now, do you have to continue to trade and make all the rules and to get out of there where they take the capital and actually put it in the account? Yes. But could you trade a lot more relaxed knowing you've already hit the goal? Sure, I would think. So this is what you want to do, okay? You want to become a student of the market where you take the time, you go here, you get signed up for one of these accounts, whether it's 25 or 50. That's really the sweet spot. We like 50 for a couple of reasons. First of all, you get a little bit more wiggle room on the drawdowns, okay? See, over here for the 25K, the drawdowns are pretty tight. See this? 500 a day, 1500 max. You know, a couple of bad trades upside down on crude oil with some contracts or gold, you could pop that pretty easy. And then you have to do a reset. You don't want to do that. You come over here, you trade up to 6 contracts. You only got to make 3K in 15 active days. And your drawdowns are doubled almost. 1250 a day and 2500 max. So there's plenty of wiggle room to take a couple of hits and then come back from it. Yeah, you could have done that, David. David's asking, could you have, if the other way to do it would be the way we taught earlier in the session with the 2-lot scalp runner program. Yes, absolutely. So each one of these entries would be if you've done the 2-lot scalper runner program, yes, would be managed in that way. And so, in that sense, you know, the results would be different than this. Yeah, because you're going to have a scalper and a stop out on a runner, scalper, stop out on a runner. You know, catch the runner here, scalp, stop out, re-enter, catch that last leg. Yes, so that number would be different. Kevin, if you already have a NinjaTrader account, and by the way, I'm not disparaging anybody who wants to trade their own capital. You know, for instance, a lot of people, I personally think this is just a fantastic setup. I don't know why anybody would not do it, but you know, maybe you have your reasons, and that's cool, whatever. The first 8,000, once they put the 50K in the account and you're trading live, the first 8,000 goes directly 100% in your pocket. There's no split on that. So the split only occurs after your profits exceed 8,000, and then that's split 80-20. 80 to you, the trader, 20 to the one-up trader funder. But you know, this might be another option for you if you have an account at Ninja or AMP or another broker, and you want to explore this and you don't want to continue to risk your own capital. You can leave that capital in the other broker, just sit there. You don't have to continue to trade it. Yeah, you're using their money. That's exactly what this is. So you might be like, why is these people nuts? What, they're going to take a risk on me? Really? Well, I mean, let's do the math. I mean, and by the way, we give you a discount on this, 25%. We give you a code. Once you join Viper, we give you a code. And when you go to check out, this comes down to $112.50. And you only pay this as long as you are in the evaluation period. Once you get funded, those fees all go away. Yeah, so that's only why you're getting an evaluation period. So it's a great setup. I would suggest everybody in here, if you can, come join up with us. We sent you an email with some links to get all signed up. You can do it tomorrow, no problem. After the room closes, Gary can get you all signed up tomorrow or over the weekend if you want to, Saturday. We'll give you the code. We have a promo going on here, so you can go, you know, sign up for this, $112.50. Edward S. says everybody in here should go do it right now. Yeah, well, I mean, you know, we show this setup all the time. And a lot of people have come joined us from literally all over the world. We got people from Asia and Europe trading with us now. You know, traders who have been with us like 8, 9, 10 years. You know, some of them trade overseas. They trade the currency future markets. You know, they're up at night trading, for instance, you know, you'll see them trading, you know, like 6E, Euro futures, 6B, 6S, Swissy, dollar index. All the futures markets that you can load and the instruments on here all trade exactly the same way. Like we would never say do this system like this on ES. Oh, you're trading 6E? No, it's different. No, it's all the same. The Bill W, the discount code for the one-up trader is in January, expires tomorrow. We get a new one on Saturday. So, if you came here and signed up now, on this one, we would give you the January code. Yeah. But even if you signed up tomorrow, we would give you the January code because as you're checking out, the January code would still be valid for here. Now, if you came in Saturday, we would have to give you the February code. It switches it's 25%. Yeah, 25. And by the way, it's 25% off of everything. It's not just this account. It's 25% off of all of them. So just do the math. I think once you do this one, less 25%, I think it takes it down to like 93.50 or something like that. Just do the math. We had Gene. I don't know, Gene, you still in the room, Gene? I know you were in here earlier. I think Gene just got the 150. Yeah, it's quite a story. Gene literally joined us. How long ago was it? Like a month and a half, 2 months. Got funded on the on this 150. I think it was within the past couple of days. Yeah. Mm-hmm. So now they're going to take 150K, going to put it in a trading account, live, real money, and then he's going to start trading against this. And the first 8K is in his pocket, 100%. And he came to Viper just literally, I think it was 6 or 8 weeks ago. Watched all the webinars, came to all the trading, comes to all the live rooms every morning. Trades very diligently on the equities, trades the correlations. Most days I noticed that he's up anywhere from 1,000 to 1,900 bucks. I think today was like 1,950. 15 active days, boom. Got the 9K. I think it was just a couple of days ago. It was late last week, like Thursday or Friday. I can't remember exactly. I think Gene left, so I don't see. Let's see here. Go back. What's the discount code? Okay, let's see here. Mindy. You say you must have consistency. No, the consistency rule, Mindy, is you have to look it up on here. There's a multiplier here. You have to take your best day times, I think it's 75%. It's a little bit since I read that rule. And then I think you have to have 3 days, 3 active days that add up to 75% of your best day. So let's say, for instance, one day you had, you made 1,000. Okay, let's just use a round number. You made 1,000 on YM. Then you have to have 3 other days that add up to 750. Yeah, that's a consistency rule. So these are the rules. And then you can't trade more than 15 contracts. You got to make $9,000 in 15 active trading day, defined as active. Taking one trade is considered an active day. That's all you have to do. You can't exceed this maximum drawdown of 5K, and you can never go over $4,000 loss in a day. Here again, once you're funded. Now, if you're going to go for 350, you're going to pay 350 less 25%. How much is that? The code will be sent via email once you sign up, Radon. And what you're going to want to do is get a hold of Gary when he gets you set up and everything's all set up. Yeah, the code will be sent to you, and then you go sign up over here. It's all. If you look at the email we sent to you, that had the links for here and the other links that you went. If you read the top part of that email, it explains how that all works. And you watch the video. We did have a little thing together this morning at 9 o'clock, which a lot of you came to. In that video, in that webinar, we explain in detail how that all works too. So, yeah, just you have the contact numbers. Let me get those up real quick here. Where the heck are we here? Stand by. Let me get the site back up. Yeah. Let's see here. Oh, here we go. I'm getting the contact page up for you. Most of you have it. All right, Bill W., take it easy. I think you're signing up. I got a note from Gary's wife. I think she sent me a note to get you set up. Yeah, I'm gonna do that tonight. Yeah, so welcome on board, Bill. Welcome on board. Good to have you on the team. Yeah, we'll get you all set. We'll get you set up, and I'll let you know. We'll let you know when that goes through. Yeah, so in the morning after the room closes, here's most of you know, just go to contact on the website here, vipertrainingsystem.com. Here's the number, 405. You see the number that's directly to his office. There's a Skype. Just sign up for Skype and Skype him at Viper Trader. And then a lot of times he'll have to dial in after you get the zip file to help you install it and get your charts all set up. And then he just dials in with this TeamViewer. So use this download, not the one on the TeamViewer site, because he doesn't, I don't know what the issues are. He uses this older version. Okay, any other questions? John B. So glad to be with Viper. So glad to trade one up after 2 months. I'm starting to get it and get a funded account. Good for you. I love hearing stories like that. That's just so good. Good for you. A lot of people do it. It's up to you. If you've been on the fence or you think, trading is for you, you want to make a couple extra bucks for fun in the morning, some extra spending money. Some people come in, they're retired, they just trade. You don't have to risk you don't have to put, it used to be you have to take your capital, hard-earned capital, maybe even some of your retirement money, put it in a trading account, put it at risk. You don't have to do that anymore. Look at it this way. For $112.50 a month and you get funded, you're controlling $50,000. Where else can you do that? Where else are you going to get that deal? Nowhere. I see that, David. I don't know about them. I know there's other funding partners out there. I see a couple of names in there. I know Gary and I personally know the funding partner behind Top Step Trader. We know him from years ago. We personally know him, and we know that whole team over there. And they've been in business for, 7, 8, 9 years, almost as long as we've been in business. So, and I think they have like 1,000 or 1,500 active traders. So that's a serious business. When you go to get paid, you're going to get paid. They're not going to rip you off. Okay, that's what that's all about. One Up Trader, we know these guys really well too. We've done a lot of work with them over the years. They're a little bit younger company. I think they're 4, 5, 6 years old, a little bit younger than Top Step. Very solid company. When you meet these criteria, they fund you. They put this capital in the account, and they, as long as you obey the rules, they pay you. They wire the money to you. Now, and those other companies, I don't really know them. That's not to say anything bad or good. I just don't know them. Yeah. Last question, then I got to wrap. I got to get ready for tomorrow. Most of you, my apologies. I'm gonna have to leave the room early tomorrow. I have a flight to Pennsylvania tomorrow morning out of San Francisco, so I'm only gonna be there till probably about 7:30. But let me just explain that real quick. So here's how when I'm glancing at markets, here's how I'm doing it. My main go-to screen is here, ES. Right next to it on my 4-screen setup is NASDAQ. Up here to the left is YM. And then on this chart, directly above my ES chart, is a split screen of gold and crude. So that's how I do that, okay? So I'm looking to take trades on this instrument right here. This is what I want to leverage myself up and make money because it's a follower. It's a follower. I may or may not take trades over here, but I'm going to watch them. And I've shown this before. The other thing you can do is, let's say, for instance, hypothetically, NASDAQ is the leader down. And quickly right behind it is following up with YM breaking down, like you see right here on this chart. Okay? You don't have to trade those. However, if you want to track the movement, you would go ahead and put a sim short here and a sim short here, and then when he has followed up and broke, like we looked on that other chart, later, perhaps 30 minutes or 2 minutes later, you can comfortably take this because you're going to see that these trades are already up. And by the way, over here, I'm just going to explain it this way, not to confuse anything. Let's just leave it real simple. And then I'll look here for what gold's doing just above the ES chart. Right? So in our hypothetical example, we said that YM was heading down, just like you see on the chart. So you're taking shorts, either in sim or in micros or with real money. Nazi's normally the leader. She's breaking first. Gold at that time should, if the correlations are intact, be heading up, which it was, right? We showed that. Remember that chart? And the little laggard over here is ES. So we can load up for bear on that pop, knowing that these are all doing their thing. That's how I approach it. They can, whatever David M's question was, the profits from your trading from one-up trader, are they considered capital gains with IRS? I believe it's taxable income because they give you a 1099. They give you a 1099. So you have to look at, it depends on your situation. Are you an individual? Do you have a corporation? Do you have an LLC? What write-offs do you have? How does that all correlate with the profits that you get from what up or top step? But they give you a 1099, and then you have to address your tax situation. You're treated as an independent contractor. Right. Louis, I don't look at other charts. Louis' question is a good one. Do you just trade the charts that you see right here? Yes. I don't have any other charts up like 240 or 30. We used to do that when we first got started, like 9-10 years ago. We traded like a 3-minute and got guidance from 60, and then we looked at a 5, and sometimes it'd be slow. We'd have a 1-minute chart and all that sort of stuff. But it was so confusing, and paralysis by analysis, and you get in late, and 60's going up and 30's going down. Should I take it? Yeah, no, everything you need is right here on this chart. You don't need anything else. Okay, any other questions? And then we're going to wrap. It's getting late. Next week, you could please show a few more of the actual correlations examples like you did a week ago. I've been trying to watch correlations, but they whip around so much it's hard for me to see in real time. Well, that's what I was going to say. If I said it earlier, okay, Trafone and everybody here, I'm going to try to call some of the correlations in the room as they happen. I'll observe them and I'll say them. If you find them confusing, then don't use them. You only want to add things to your trading repertoire and your toolbox or whatever that are going to help you to make good decisions and make more money. If for some reason the correlations are throwing you off, what the heck's he talking about? This is going up, that's going down. Is he saying to short ES? Should I be getting long? Well, then get rid of all that stuff. Keep it simple. Yeah. Okay, Louis, thanks. Let me stop this recorder.